Hello financial investors and welcome to the channel. Today we're going to go ahead and go over the M1 Finance dividend stock I am buying today on the 10th of August 2020. We're going to go ahead and cover stock futures up on the screen now. Then we're going to go ahead and dive into the M1 Finance platform. Take a look at the overall performance of the portfolio. Take a look at the 1 week performance. What stocks were up, what stocks were down, the activity, what stocks paid out dividends. We did have a few dividends get paid out last week, and also we're going to be covering what stock we are buying today here on the 10th of August. So if you're interested in any of that, definitely stay tuned. But if you are brand new to my channel, have not yet subscribed, definitely subscribe down below to the channel and tune in on a weekly basis because we do buy stocks every single week here on the channel. Also, if you do enjoy this video, find it helpful, entertaining, just fun, go ahead, go down below, give this video a thumbs up, make it blue, and drop me a comment. Let me know what stocks you're buying this week or planning to buy here in the month of August. Pretty exciting. With only 4 months left in 2020, it's going to be a bit of a, I think it'll be an exciting 4 months. There's a lot going on here, not only in the stock market, but politically as well, with the election just a few months away now. So it is going to be a pretty wild ride. So with that said, let's go ahead and get into the video. Now, here we are on our main screen looking at stock futures, and we did see that the S&P 500 was up a little bit higher at 0.2%. It has pulled back slightly, just slightly at 0.15. The Nasdaq has been negative since I've been watching stock futures right now. The Dow Jones is up by 0.93%. Right now I'm recording, it's a little after 1 in the morning right now. So we do have all the overseas market outside of Japan open. We can see Hong Kong is down 0.58%, England is up 0.62%, and Germany is down by 0.10%. So overall, we do have one that is positive and two others that are negative. So we'll kind of see how this kind of plays out for the rest of the day. And we'll go ahead and jump back here after the M1 Finance portion to take a look if stock futures have changed during this sort of outlook here. Now from here, we're going to go ahead and dive over into the M1 Finance platform. Now here, we have $70.67 in cash. Now I deposit roughly $50 every month, every week in dividends. That way, we're just dollar cost averaging into the market on a weekly basis. I may end up putting like a chunk just for the remainder of 2019, but I'm not sure. Not a 2020. Not sure there. I think I just like the consistency of just being able to look at my portfolio on a week by week basis. This kind of forces me to come in here, take a look at the activity for the past week. I don't really look at my portfolio on a day by day basis. M1 platform is a set and kind of forget style platform if you have the auto invest feature on. I don't have it turned on just because I like to go in here every Sunday, take a look at the week performance, what was actually happening, how did it compare with the other markets or indexes. So that's why I like to kind of go in here and jump. But I do see a lot of investors actually have the auto invest feature on. Maybe they're invested in a little bit less companies than I am, or just an ETF and a couple bond ETFs. So it makes it really easy on this platform. Now, taking a look overall, we're positive by roughly 23.42%. We're nearing about almost $3,000 in capital gains now, just in straight gains. Now, majority of this now comes from market gains. We're just a few months ago, we were negative, for a time. We were actually in the $14,000 point. I did post this on my Instagram that my lowest point was 14,000 some change, and here we are nearing 25,000. We're not at complete highs. Complete highs would be about 25,220. But if this week here goes forward, continues to be good on earnings, beating expectations, we may see the market continue to move higher, and we may hit some new all-time highs once again within this portfolio. So overall, really positive there in the portfolio. Now, if we're taking a look at the 1 week performance here, we are up 2.07%. Now, when I compare this to the other indexes, such as the S&P 500, we did fall slightly below the S&P at 2.45. We were at 2, and the Dow Jones completely blew the S&P and my portfolio out of the water here, up 3 0.8%. And I believe Apple may have played a pretty good portion of that change there within the Dow Jones. And the Nasdaq was down a positive, still positive at 2.47, but the Dow Jones did beat out that Nasdaq. I think that's the first time on a weekly basis that I've actually seen the Nasdaq underperform the Dow Jones. So it's been quite a while, but overall I'm pretty happy with that 2%. Now we'll take a look at what helped the portfolio and what did not help the portfolio. Let's go ahead and sort this. We're on the 1 week basis. This is what I like to do. Now, our best performers this week, Cisco Corp, up a nice 9.37%, followed right behind by Community Trust Bancorp, 8.92. This one seems to be bouncing back now. It hasn't been doing so well lately, but with this bounce back here of this past week, this could be a good bottoming opportunity, where I might just take this opportunity to add a little bit more to this financial. I know Warren Buffett, a lot of investors are discussing his stake in Bank of America, just piling billions and billions of dollars into that company. I do like financials. I wasn't invested in them too heavy. I was looking sort of for some recovery, some bottoming out period, so I may target Community Trust Bancorp, JP Morgan. Those are my two financials along with Eaton Vance there. Now ABM Industries up nearly 8%. Main Street Capital, we're seeing a BDC kind of pop up here, 5.71. Financial 5.56. McDonald's 5.31, and so on. So we did see quite a bit of companies actually outperform Apple. Apple's just been on fire lately. Now our worst performers are sort of detractors of our portfolio, where number one, Tanger Factory Outlet down 4.51, Cardinal Health down 3.74, Consolidated Edison. Now, Consolidated Edison, I'd have to take a look at why exactly they were negative last week. I think that'd be kind of interesting to take a look at, why they were negative. Maybe I could look it up on Seeking Alpha or something of the sorts, what sort of news kind of caused them to go down. They were what I had purchased last week, and they actually did their earnings. So if I bring up their earnings here, I'm just kind of sharing this quickly with you guys. Okay, so here's probably what caused them to sink here. So this was posted on August 6, 2020, that Consolidated Edison, they beat expectations on their earnings per share by 7 cents, and they were expected at 57 cents. They came in at 60, so they beat by 4. Okay, that says 4 cents, so they did beat by 4 cents there. Oh, non-GAAP EPS. Okay, but this is probably what caused their business to kind of go down last week. So revenue came in at negative 0.7% year over year. That's a miss of $100 million. Now, Consolidated Edison being one of those utility companies, this may be just people not paying in to their utility bills, and this will be recovered. If you don't pay your utility bills, you'll get a foreclosure. You'll get a mark against your property. So if you're out there and you're not paying your utilities or your rent, the utility companies will actually put something against your home. So eventually, I believe they'll probably end up getting it back, but we'll kind of see how that kind of plays out. I still think Consolidated Edison is a great business model in business here, even here during the illness kind of going around. And their business reaffirms their adjusted earnings range of 415 to 435. So that's just probably what kind of caused them to go down last week. I think it's a really good buying opportunity that I'm getting them at a 2.11% discount compared to where it was last week, and I was already happy buying them last week. So I think Consolidated Edison is going to be on my chalk block once again, but we might add a second one. AbbVie, 2.10%. AbbVie was on fire lately, coming up to like $99 here just recently. It has been pulling back slightly, and we do have a couple real estate investment trusts down here. So that is the 1 week activity as far as the performance for this past week. So a little bit of a mix of positive and negative companies. So this past week, August 3rd through the 7th, we did have a nice amount of dividends get paid out. We have ABM Industries. Let's go ahead and bust out our handy dandy calculator. And we have 324. Let's go ahead and put it right here. 324 plus 1511 plus 209. So we had $3.24 from ABM Industries, $15.11 from AT&T, and we had Lowe's here of $2.09 for a total dividend payout last week of $20.44. So I can go out every single day last week and buy something from the dollar menu, or, I don't know if they have a dollar menu anymore. It's been a while since I've been at McDonald's, but, I could do it. Okay, so overall, that $20 and change along with our $50 deposit that we did on Friday allows us to have $70.67 in capital able to be invested here on Monday. So, kind of jumping into what stocks are going ex-dividend this month, in the month of August. So last week, if you guys haven't checked out Seeking Alpha, I talk about this on every video, but I do get a lot of new visitors here on my channel on a week-by-week basis. So if you guys are brand new, subscribe first of all, down below subscribe, but check out Seeking Alpha. It's a free account you guys can set up over there. Then you go ahead and go over your portfolios, create a portfolio, give it a name, and then within the portfolio begin adding your ticker symbols and head over to the dividend tab right here, and you'll be able to sort this by your ex-dividend date. I haven't figured out how to pull this data into my Google spreadsheet. Once I can do that, maybe I'll use that instead, but this is such a nice clean interface that you can use. Okay, that's enough of that. So today is going to be the 10th of August. So here we scroll down right there. So Apple just went ex-dividend on Friday on the 7th of August, so I'll be paid out some dividends from Apple here shortly. Now, the Southern Company is going ex-dividend on the 14th. So Southern Company, I'm going to go ahead and just use my spreadsheet for this portion. And another thing here is that I haven't updated this for this past week, so this is slightly off. And it's only off with Consolidated Edison. So I'm just going to go ahead and update it really quick. I'll show you guys how I do this. Using the activities tab or the holdings tab. M1 Finance kind of made this a bit wonky, where they used to have, they still have the cost basis in there. Okay, so I just have to look for Consolidated Edison right there, and it has 8.53129 shares. 531. Yeah, so 8.53129. 8.51 through 29. I think I put that in there. Yep. And then our cost basis is no longer $5.99. It is now $654.64. So here, $654.64. And this is going to adjust here. Now, prior to the change, we can see here that we were still down negative 2.25. We saw our yield was at 3.98. So I'm going to go forward now. Our dividend yield is now 3.99, and our percent change went from negative 2.25 to now negative 2.12. So by buying last week in the red, we actually lowered our negative percent change. We increased our yield on cost. Also, if you take a look here at the buy price, our unit cost, it's at 76.84. Let's see if it changes. 76.73. So our unit cost per share went down slightly. Now this week, it may say that it's a little bit lower as far as percent change, but we are getting it at a nearly 2% discount to last week. So this week, if it does bounce back because investors are looking at Consolidated Edison after last week's 2% loss, that the other companies, utility companies, were actually positive, such as Duke Energy, what were the couple other ones? Southern Company. I know a commenter last week had actually commented that they were planning on purchasing some of the utility companies. I checked them out. They were actually positive versus Consolidated Edison, which was negative. The reason for the negativity was more than likely earnings with their revenue. So I'm pretty happy with buying some more of Consolidated Edison up until it gets to about $900 invested in that company. Okay, so jumping back over here, we have the Southern Company. So SO, I believe SO, Southern Company is up by 18.95. Here we have Walgreens, which is negative. I'm not going to invest anymore in Walgreens or oil, Chevron. I'm going to go ahead and hold off on those. And Weyco Group, I'm not sure if I'm positive or negative. It is negative by 21.67%. Now that would be a pretty good one to average down on. They have not cut their dividend. They haven't raised it in a while. I have to check them out. They've had 38 years of continuous dividend growth. They are going ex-dividend here in August. I haven't actually looked too much into them. I think it'd be a good idea to take a look here at Weyco Group. And have they had earnings here? Let's take a look here at Seeking Alpha. So here is their earnings. Declared 24-cent dividend, so we multiply 0.24 by 4, that's 96 cents. Is that any difference? No, they're kind of keeping that dividend of 96 cents. And I'd like to take a look at their earnings. How did they report? Whoop, got an ad there. So GAAP earnings per share of negative 0.91 revenue, negative 72.5% year over year. So yeah, that's a pretty harsh earnings report there. So I'll have to read through here and take a look at the earnings statement, earnings call script afterwards after this video, and take a look at the company. So for that reason, I'm going to go ahead and hold off. I think that revenue miss year over year of negative 72, that's a big thing with retail, and with all the businesses being closed down, and that's a pretty big chunk there. So I think that's a bit of a risky one, so I'm going to go ahead and hold off on that, but I'm still comfortable with Consolidated Edison. And let's see here, Weyco, Stanley Black & Decker, Lockheed Martin, Kellogg's, McDonald's. I think all those as well. I'm going to go ahead, and those are all positive. I'm not going to be averaging up at this moment. I have actually considered averaging up in the past, but right now I have a really good one here that I'm happy buying again. Last week I did buy it, and I'm going to go ahead and make that purchase once again this week. I was hoping to have a little bit more to buy this week, but Consolidated Edison is going to be it. I also do see that there's a dividend increase down here with Altria. Altria increased their dividend by 2.35%. So they went from 3.36 to now 3.44. So watch over here. My current yield on cost is 6.09. And that'll all change. My yield on cost is now 6.23% just by buying and holding. I think I've had a couple dividend raises within that company, but if you take a look at Altria's yield on current yield, they're offering a 8.16% starting yield right now. That is crazy, Altria. So that is that. Jumping back to Consolidated Edison, that's going to be my single stock here that I'm going to be buying this week. Once again, I know it's not the most splashy stock, but within this portfolio, Consolidated Edison, it's nice just to have this portfolio. This is our only actively really kind of purchasing companies within. All of our other accounts are just kind of, they bought VU or VTI, or I have VIIIX within my Roth 401k and SPLV and another account. So I do have a mixture of ETF accounts that I just do not touch and mess with on a week by week or month at all. I don't really track them at all. This is the only account that I really go into and just kind of hand pick companies to invest into. And I really like to check out the performance between the accounts to kind of see, is it worth investing in single stocks where you're kind of hand picking companies yourself, or are the ones that have done, if you just bought into it. So this one, for example, let's go back to our portfolio. We could take a look at the return here of 23.42%, and this is since January 8th, 2018. Now if we jump, let's take a look at the 1 year performance. I think, well, that's a good one. So 1 year performance, this account has gone 10.05%. So from 1 year ago, back in August 12, 2019, it has gained roughly 10.05%, or about $2,000. Now if I do this whole 1 year performance with the other account, the taxable account, now the taxable account, this is only the Vanguard fund in here. This is up 40% right now. If you take a look at the 1 year performance, it is up 18.08%. So here, this seems to have had a better return, but this one we're not really washing it with capital. You know, we're not really dollar cost averaging. There's no capital being invested into this. If this was to have capital being invested into it on a upwards trend, we might see the unit cost go up or down, but we do have $5.17 sitting in cash. I'm actually planning on moving all my taxable accounts out of M1 Finance. I'm moving all of our capital over to Fidelity. So here for this example, tomorrow's going to be, I believe, a positive day. So what I'm going to do, since I actually have you guys here on the video, I am going to sell out of VOO 100%. I'm going to go ahead and I have $608.11 in this account. I'm just going to go ahead and put $800 because, oh, I have auto invest turned on. So let's go ahead and turn that off, because it warned me that if I were to do that, auto invest would just kind of auto invest my capital. So here I want to go ahead and, now this has been in here for quite a while. So the reason I'm doing this is because this is all long-term capital gains now. I've had this account started since February 8th, 2018. So that's how long that this account has been active, and all these stocks have been here getting purchased. Now I am going to have to pay taxes on the dividends within this account, but that's fine. You know, that's the cost of having dividends in a dividend account, or stocks in a taxable account. So back over here, I'm going to go ahead and buy sell, and I'm going to go ahead and sell. I have $608.11 in capital in this account. I'm going to go ahead and just put in 800. That way, regardless of where it's at tomorrow, you don't want to go ahead and put in, when you're selling, you don't want to go over here and put this in amount, because tomorrow, what happens if this value is now $612 and some change? Now I have $4 sitting in cash, or in the invested, that, you know, I want to actually remove. So here, always oversell more than what you're trying to sell. That way tomorrow when this goes active, everything will get sold out of this account. I'll have that cash sitting here available. I'm then going to transfer this capital out of M1 Finance, and I'm actually going to be moving it over into my Fidelity account. I'm consolidating all my taxable accounts are now over in Fidelity, and I'm going to be probably adding $10,000 or so over into Fidelity to kind of kickstart that taxable account, and then we're going to be growing and buying growth companies within that account. So that is going to be it for today's video. Let's go ahead and check out our stock futures, and in the meantime, if you guys are brand new to my channel, have not yet subscribed, definitely subscribe here to the channel. If you guys have enjoyed this video, definitely give this video a thumbs up. Subscribe to the channel if you have not yet subscribed, and of course, if you have any comments or questions going over anything in today's video, drop it down into the comment section below, and that is going to be it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.